Hello everybody, I'm Jason Lowe, Head of TAPS, which stands for the Association for Payroll Specialists. Welcome to this JobKeeper Update webinar, which we're running for TAPS members. We're also putting this webinar up on YouTube, so if you're watching us on YouTube today and you're not already a TAPS member, I strongly encourage you joining. TAPS has been around for 30 years now, and we keep payroll people up to date with everything they need to know. So join us at payroll.com.au. And if you're already a TAPS member, don't forget TAPS is still open for business. The helpline's running, we're doing webinars, and all our training courses are still available in our new online classrooms. So we look forward to seeing you very soon. Today is our second JobKeeper webinar. We ran one a couple of weeks ago when this was first announced. So today we've got 1 hour of brand new content. So we're not going to be able to cover all the stuff we covered before. So if you want to understand a little bit more about the eligibility and how it works, by all means go and watch the other webinar which is up on YouTube. But for today, we've got lots of brand new stuff which has only just been announced in the last few hours. So joining us, I'd like to say hello to my good friend and our moderator for today, Mr. Chris Biddle.
Thank you, Jason. It's good to be with you again. I think 2.5 weeks ago, we hadn't even heard of JobKeeper, and much has happened, lightning fast legislation. So where are we up to? What's happened? What's happening next?
Yep, excellent. So let's start with a quick recap. JobKeeper was first announced on the 30th of March 2020, and then the following day the ATO opened up their website and said you guys can start to register your interest, and once we have more information we'll send you out everything you need to know. Only last week the legislation was finally passed, so it was passed on the 8th of April and we got royal assent on the 9th of April. And now that we have legislation, the ATO is able to start releasing information about how this works. So what we're doing today is giving you the latest update. Today is the 16th of April, so everything we're giving you is what we know as of today. But the ATO is stressing, as they continue to work through this process, there'll be more information coming out. So keep an eye on all the ATO websites for the latest information. Even though the legislation has passed, there's still things that haven't happened yet. Although you can register your interest, and you've been able to do that right since the beginning of April, you still can't officially register and enroll in the JobKeeper scheme. The ATO is still building that technology and building application forms and getting everything they need to get ready. And that's not going to be available until the 20th of April. So although that is a little time away, there's still plenty we can do to get ready. So that's what we're going to be covering today. And then the other key date that I wanted to make you aware of is the 4th of May. And that'll be the first time you'll be able to then go back to the ATO and claim your first reimbursement. And this is a key thing for this legislation. The way this legislation works is you are supposed to pay the people now and claim it later. So ideally, we should have been paying all our employees their JobKeeper payments going all the way back to the 30th of March. And then at the end of April, we go back to the ATO and say, yes, I declare that I've paid all my employees. Now you reimburse me. Now, obviously, that hasn't been possible because we had no legislation, and lots of people decided to wait until the legislation came in. So for the first month of this scheme, which is April 2020, the ATO are giving us a chance to catch up and have everything locked in by the end of the month. So by the 30th of April, you must have done everything we're about to learn in today's webinar. You need to make sure people have got either 2 payments of $1,500 for the first 2 fortnights of the scheme, or if you can't have done that, at least paid them 1 payment of $3,000 so that they got everything that they're entitled to. And you will need to have uploaded all this information up to the ATO via your single touch payroll by the 30th of April. So we've still got a couple of weeks to tidy ourselves up. Let's jump in and have a look at what we actually really need to do now.
Okay. Jason, in the last webinar, we talked around, the fact that it was a 6-month scheme, but there were fortnightly payments, and there was a little bit of grey as to, how fortnights and 6 months work together. Do we know now that it's actually 13 fortnights and not 6 months?
We do know that now, yes. So the ATO have confirmed that the way this scheme works is there are 13 fortnights, and each fortnight we have to pay our employees $1,500 in those fortnights. So what we've got on the screen here is a table that the ATO have put out, and I only want you to look at the first couple of columns. because what the ATO have done is that they have defined what they are recognising as a fortnight. So the first fortnight began on the 30th of March and will run through till the 12th of April. And then the second fortnight starts on the 13th of April and will run through to the 26th of April. The way the ATO is operating this is any pay dates that fall within that date range will belong to that particular fortnight. In terms of reimbursing us our money, they will be looking for the last full fortnight to include in a particular month. So the last fortnight in April ends on the 26th of April. So there will be only 2 fortnights in the first month, the fortnight ending the 12th and the 26th. In May, there are also 2 full fortnights, the fortnight ending the 10th and the 24th. So the way the ATO is going to reimburse us our money is pretty much for every single month, they are recognising 2 fortnights, except for the month of August. The month of August, they are saying there are 3 fortnights, so the ATO are going to reimburse us $4,500 in that particular fortnight. So first thing we need to be aware of is that the ATO is defining what is a fortnight, and then we need to be aware of any paydays that fall within that fortnight automatically put us in that particular fortnight.
Okay, now to be clear with that, Chase, if we're running fortnightly pays the way we normally look at it, we might look at April and go, well, actually I've got 3 paydays in April, but it's not about our normal cycles. It's just about how it fits into the relevant fortnights, the way the ATO has presented it. So there can only ever be 2 in April.
That is correct, because the ATO defines the start and end date for the fortnight. So in your example, Chris, you might have a final payday on the 28th of April. You can see that now is falling into fortnight 3, and they are rounding that over into the month of May. So we still pay our people using our normal payment cycles, but the ATO will then group us into an appropriate fortnight based on their date ranges.
Okay.
Now,
it would go on, Jason.
No, you go.
Obviously, not everyone gets paid fortnightly. That'd be nice and simple. So, have you got some examples about how it works for different cycles?
I have got some examples on that, but before I get to that, I might stress that to be eligible to claim money back from the ATO, one of the key requirements is that you must have paid your employees at least $1,500 per fortnight based on that ATO definition of fortnight. So in the first fortnight from the 30th of March to the 12th of April, you must have paid $1,500 in that fortnight. And in the next fortnight, you also need to pay $1,500. The key thing here is each fortnight will stand alone. So let's take a look at those rules in more detail. And I'm going to start with weekly paid employees, but we'll also look at fortnightly and monthly. So we've got those first 2 fortnights listed there, and we know that the key information is that employees must get $1,500 every single one of those fortnights for you to be eligible to be reimbursed by the ATO. So this could now put us into 3 potential categories. Starting on the left-hand side, I've got an example of a permanent employee who is still at work, and they're paid weekly, and our normal cycle is payment on the 1st, the 8th, the 15th, and the 22nd. Now we can see all of those pay dates fit nicely in the first 2 fortnights, so we're good. Now, let's assume this person earns $1,000 per week. We just continue to pay them their $1,000 per week. At the end of the month, they've been paid $4,000. I meet all the requirements of them getting $1,500 in a fortnight, and they've got the full $3,000 over the 2 fortnights in the month. We've paid the employee $4,000. All the ATO will need to do now is reimburse us for that $3,000 at the end of the month. All good there. Let's talk about an employee who is on stand down. So we may have stood them down, we have no work for them, but now the JobKeeper scheme is available. We can start paying them some money knowing that the ATO is going to reimburse us. What I would do under those circumstances is on each of my 4 pay periods in that particular month, pay them $750. So at the end of the month, I've paid them the full $3,000. And once again, I am all good. Here's where things get really, really tricky. In the third example, when you've got employees who work various hours, and I'm giving you the example of a casual employee here. So we've got a payment on the 1st of April and we've got a payment on the 8th of April. And if we look at the ATO timetable, the first fortnight is from the 30th of March to the 12th of April. Both of those 2 payments fit nice and neatly in the ATO's definition of the first fortnight. So on the 1st of April, we had an employee, he worked, he did $900 worth of work, and we paid him $900 in the first week. In the second week of the fortnight, which we paid on the 8th of April, he worked some more hours and he got paid $400 for that. So in the first fortnight, we have now paid him $1,300. But the key rule here is we must pay the employee $1,500 per fortnight. And we must do that between the 30th of March and the 12th of April, based on the first ATO definition of a fortnight. What that means is in that particular fortnight, when we run the second payroll on the 8th of April, we need to do a $200 top up so that collectively over the first 2 weeks, he received $1,500. And then the same thing happens in the second fortnight. So the second fortnight runs from the 13th of April to the 26th of April. I've got 2 weekly pay runs there, 15th and 22nd, fits nicely into my ATO definition. In the first week, we paid him $500. In the second week, we paid him $900. We're currently at $1,400. We need to top up $100 in that particular fortnight to ensure he gets his $1,500 for the fortnight. So we can now see in the first 2 fortnights, we paid $1,500 each fortnight. We've done the $3,000 for the month. The ATO will now be able to reimburse us that full $3,000.
Okay. Now we know we've had lots of questions around how we deal with weekly employees, and an assumption that lots of people have made is where you can just assess each week against the 750. But what's now apparent is it's very much a fortnightly calculation. So in the example you've just given, you can't look at each week alone. You've got to every second week. So every time the fortnight rolls around, you've then got to review what's happened across the whole fortnight and make adjustments accordingly. So administratively, that's potentially a bit of a burden.
Yeah, it is, absolutely. It's certainly a little bit more work for us. So yes, 2 things you need to look at. How has the ATO defined the fortnight? How many of my weekly runs fit in that fortnight so that you know what you need to balance back to? Yes, it's going to absolutely be some extra work for payroll.
Let's move on to some more simple things, Jace.
Right. Let's have a look at fortnightly employees. These are by far, the easiest group of people. So in my last example, I talked about somebody who worked weekly and payday was Wednesday. I've just shuffled things up just to show you how different dates work. Now let's look at a fortnightly payroll where you're paid every second Thursday. So our 2 payment dates are the 2nd of April and the 16th of April for the 2 fortnights. The 2nd of April fits perfectly into the first fortnight as defined by the ATO. The 16th of April fits nicely into the second fortnight. As a minimum, you need to pay them at least $1,500 in each fortnight so that you get to your $3,000. So fortnightly, a much, much easier way to operate. I suppose that's the other question that we're getting a lot of, Chris, is do I need to change my pay frequencies now that this JobKeeper scheme operates fortnightly? And the answer is no, absolutely not. But you just do need to be aware that you're always balancing back to $1,500 per fortnight. The exception to that rule is monthly, and there's a couple of different ways you can do the monthly scenario, and they're not as strict on balancing back to a fortnight on a monthly basis because you literally can't. If you're only getting paid once a month, you can't balance back to a fortnightly total. So if you look at that table I've got there for monthly, on the far right-hand side, I've got the ATO payment schedule. So for the month of April, they're going to give us $3,000. They're also going to give us that for the month of May, June, July, but we know August they're deeming to have 3 fortnights. So in August, they're actually going to give us $4,500, and then in September, we go back to $3,000. But across the 6 months of the period, the ATO have committed to giving us $19,500. So you have some options now in terms of how you set up your monthly pay for people. And let's assume we've got employees who have been totally stood down, and we're now going to give them the JobKeeper payment. Your first option is you could choose to use the exact same methodology that the ATO is using, in that, for April, May, June, July, you give them $3,000. In August, you give them $4,500. And then in September, you give them $3,000 again. So you're basically paying them the money and then immediately getting it back from the ATO at the same rate at the end of the month. Alternatively, the other option, which is also perfectly acceptable, is you can average out your payments. So we know we've got $19,500. You could average it out and just set up your payroll with an auto pay of $3,250 each and every month, and the ATO is deeming, that is, acceptable. So even though in the month of August you've only paid them $3,250, the ATO knows via STP data that this person's being paid monthly, and they'll go, look, we know that this person's on a monthly payroll. I can see they've only been paid $3,250. The ATO will still reimburse you the $4,500, so that you don't have to match exactly when it comes to monthly. Now, having said all this, that example I just gave you was for somebody who had been stood down, and you're just going to pass on only the JobKeeper. We're still bound by all the normal laws. We're still bound by Fair Work. We're still bound by awards, and you're still bound by your contractual obligations. So you should continue to pay your monthly employees who are working the way you always have, just keeping in mind that you need to give them, at least $3,000, each month to balance back to the ATO.
Okay. Now, I guess at one level, option one is slightly better for the business cash flow, whereas option two is somewhat better for the employee's cash flow. That sound fair?
Yeah, that does sound fair. Yeah. And so, so now that you're seeing some of these new concepts that are just coming out from the ATO, and they've only been released, very, very recently. We had a meeting with the ATO on Thursday night, just before the long weekend, where they started to explain this concept. And then only last night, before we're running this webinar, we had another call with the ATO where they went into a little bit more, more detail. So this is new information that's really not even out, in the public domain to a great extent yet. We're getting this information out before the ATO is getting this out on this particular occasion. But what it means is now that we know how this, scheme is going to work, you probably need to start talking to your CFO and saying, right, we've got two options. Have we got enough cash flow to go with option two, or would you prefer me to stick with option one? So I don't think it's a decision we need to make in payroll by ourselves. It's going to be something you need to collaborate with senior people in the business, particularly your CFO.
Fair enough. Now, Jason, we've mentioned a couple of times the idea of top up. What is it? How does it work?
Yep, cool. So I keep on harping on this, but one of the key requirements of this legislation is that the employee gets at least $1,500 per fortnight. So there are two things we need to be aware of. Let's say we've got somebody who earns more than $1,500 per fortnight. And this would probably be somebody who is currently at work, getting their normal income as per normal. So certainly this would be the example for you and I, Chris, and for many of the payroll professionals listening at home today. They're still at work, they're still getting their normal pay. For many of you, that may be more than $1,500 per fortnight. Under those circumstances, because you're getting paid more than $1,500 in the fortnight, absolutely nothing changes. You continue to pay employees the way they always have been. You pay super the way you always have been, and you report the income to the ATO as per normal, just in ordinary time, like we do right now. So if you earn more than $1,500, there's nothing else you need to worry about. It's only the groups of employees who earn less than $1,500 that will require us to do some sort of a top-up. So here, I'm thinking there are two groups of people. That could be any full-time, part-time, or casual employee who currently earns less than $1,500. So certainly there are probably lots of casuals and part-timers who work, very small amount of hours, who are currently earning less than $1,500 per fortnight. They are the big winners in this particular scenario, because they will now get more money than they used to before, and there'll be a requirement for you to top up to the full $1,500. Key thing with this legislation is this is money that needs to be passed through to the employee. It's not money for you to keep. It's helping you fund your payroll, but it's not money for you, it's money for the employees. That could also include full-time employees. You might have some younger junior employees, maybe apprentices, so even though they're full-time, there's still a large percentage of the workforce that are going to be earning less than $1,500 per fortnight. They will also need a top-up. The second big group of people who will need a top-up are employees that you currently have that have been stood down and that are at home doing absolutely nothing. So at the moment, their income is zero. Once we enter into the JobKeeper scheme and we start getting this $1,500 from the ATO, basically what we're doing is we're topping their pay up to the full $1,500 that we're going to be getting back from the ATO. So employees who are stood down, their full $1,500 is deemed to be a top up if they're not at work doing any particular, anything productive for you at the moment. So they're the two groups of people who are going to fall into the top up world.
So obviously we have to report this. It has to flow through along single touch. Understand there's some new codes we have to use.
Yes, absolutely. So the ATO are going to be relying really, really heavily on us reporting this information via single touch payroll. And the way they're going to do this is where there is a top up, we're going to need to use an allowance code. And we know that there are a number of fixed allowance codes, but one of the allowance codes we can use is known as either other allowance or allowance other. And whenever you use the other allowance code, it requires a text description so that the ATO knows what it is. When you're doing a top up, you must use the allowance code other, and you must put some text in it. And this text has to appear exactly as I'm about to explain. It needs to be in all capitals, and it needs to say JobKeeper-top up. And this is important. If we don't show it exactly the way the ATO want it, this could either jeopardize our ability to get money reimbursed, or alternatively, slow down the process quite considerably. So let me do some examples about how this might work in the real world. So first of all, the group of employees who currently earn less than $1,500. So let's say we've got an employee, they did some ordinary time, and for that they were paid $900. They did some overtime, that was worth $200. At the moment, they're getting $1,100 for the fortnight. We need to ensure they get at least $1,500 for that fortnight, so we need to put through an extra code, JobKeeper top up, in the allowance other with $400. We can now see the employee gets a gross income of $1,500. And basically, that is what their pay slip would look like, ordinary overtime JobKeeper top up, and that's the same sort of information that will flow through to the ATO with that $400 clearly marked as JobKeeper top up. What about employees who have been stood down and they're not at work? They are getting everything as a top up. So in that case, the full $1,500 would just go through as JobKeeper top up. And I want to stress, if you have employees who are still at work and getting their ordinary pay, if it's more than $1,500, there is absolutely nothing you need to do. So in this last example, we've got an employee who's at work. He currently earns $2,380. That is more than $1,500. You don't need to split it out at all. You don't need to say so much is JobKeeper, so much is ordinary. It just all goes through as ordinary. So only when you're topping up to reach $1,500 is where you need to use that new special code.
Probably, Jason, a thing to mention here is, and we've had, again, lots of questions on this particular issue. A few weeks ago, we had it confirmed by Fair Work that when people have been stood down, they're still entitled to receive public holidays. So in that situation, if we're paying them for public holidays, we pay them as we would normally public holidays, but it's still the difference between the public holidays paid and the $1,500 then becomes the top up. Is that right?
Yeah, absolutely. That's a really good point, Chris. So we just had some public holidays over Easter, and let's say, for example, by law we had to then pay them $200 for each of those public holidays, and they got $400 for those, those 2 days. So that's money they got paid for the public holiday. If it was $400, then all we need to do then is to top up an extra $1,100 to make them reach their $1,500 for the fortnight. There would certainly be no obligation. It's not $1,500 plus the $400 for the public holidays. Your only obligation in that particular scenario is to give them $1,500.
Right. And if they were higher income earners and the public holidays exceeded the $1,500, they'd just get the public holidays.
Correct. Yes.
All good.
All good.
What else do we need to know?
Okay, so let's just recap. JobKeeper payments are subject to PAYG. So that's all their ordinary pay, any top-up payments, everything is taxable, still needs to be reported through single touch payroll. It'll become part of their total income for the year when they do the tax return. And that's the big benefit about passing this money through payroll. We are taxing it and recording it as per normal. It's just we're getting a subsidy to help us pay those wages. The second important thing is these payments are subject to, some payments will be subject to superannuation. So all the normal superannuation rules apply. So if you have somebody at work performing ordinary time hours, those hours will be superable as per normal. It is only a top-up payment that is not superable because they're not at work. It's not deemed to be ordinary time hours. It's just money that is being, funded by the government. So we might go back to that last slide, Chris, and apply that logic to what we've just learned. So in the first example, the employee earning less than $1,500, I said they had ordinary time of $900. We know ordinary time is subject to super. It always has been in the past. It continues to be subject to super, so that $900 is superable. There was $200 worth of overtime. Overtime has never been superable. It's still not superable. And the $400 top-up payment is also not superable. For the employee who's been stood down with no work at all and just getting $1,500 top-up, no top-up payments are subject to super. No super there. We're just passing money through from the ATO. The last example, the permanent employee who is still working and getting $2,380, that would all be ordinary time work, all subject to super. You still pay the super as normal. So it's really only the top-up component that is not superable. Which I suppose leads us to payroll tax. Do we have to pay payroll tax on these components? So far, 2 states have announced that JobKeeper payments will not be subject to payroll tax. They are only announcements at this stage. There's no legislation to back it up. And their announcements have been very broad, where they've just said JobKeeper payments will not be subject to payroll tax. I suspect what they really mean is essentially what we've just explained for superannuation. I believe that the way it'll really work and what they're really trying to say is that top-up payments will not be subject to payroll tax. Certainly the normal payroll wages we have and the normal income we pay people for the time that they've actually worked will still remain payroll taxable. It is only that top-up component that is not going to be subject to payroll tax, but we need to really wait and see how they how they put that in the legislation. The other thing to remember is even for the components of income that typically have been subject to payroll tax, all of the states have now introduced schemes with deferrals and discounts, and all those things will still apply. So what we'll need to say is, right, here is our normal income, which has always been payroll taxable, and then apply the deferrals or discounts that each state is offering, and then we have these additional top-up payments which we're assuming are not going to be subject and are not part of the payroll tax scheme at all. Is that fair to say, Chris?
Yeah, I think it's fair, and I think in terms of whether it's superable or not, our best parallel would be government paid parental leave, because really the top-up is really we're passing on an amount that's coming from the federal government, so it best equates to paid parental leave, I think.
Yep, spot on. Good point. The last thing I want to highlight on this particular slide is Some of you might have already been making JobKeeper payments up until now and have not been using this STP code, because until about 5 o'clock on Thursday afternoon before the public holiday, none of us even knew about this existed or what it would really look like. So this is new information. So if you have already been making JobKeeper payments and you haven't been using the JobKeeper code, you're probably going to need to set up that code, and it might require you to reverse some data and set it up again using the code. So for this, I'm encouraging you to talk to your software payroll provider. We did hint at it at the last meeting that certainly the top-ups are not superable, and it would be a good idea to set them up as a separate allowance code, but we didn't know the full rules about how they were to work. So talk to your payroll software provider about how you reverse figures out of one allowance code and put it into the new correct code, or they might even be building some some technology which allows you to transfer that across seamlessly. So one of the big messages here today is Chris and I are here to explain the theory and the concept, but you will need to still go back to your payroll software provider to figure out how to make all of this stuff work in the real world, because each software company will do it slightly differently.
So, Jace, the JobKeeper top up is one new code we have to deal with, but it's not the only one, is it?
No, it's not. And this second code is perhaps probably the most important code. And this code is called the JobKeeper Start Fortnight code. And as I said, the ATO are going to be relying very heavily on single touch payroll data to figure out what they need to reimburse you. So when you start paying JobKeeper payments to your employees, what you're going to have to do is enter a special code again and say, right, we have started paying JobKeeper for this particular employee, and we started it from a particular fortnight, so that when the ATO look at your STP data, they will be able to, for example, oh, this person started getting JobKeeper from the very first fortnight of the scheme. I need to reimburse them, 2 weeks for the month of April. So the way this code works is we've got this table that the ATO have put out again, where we looked at the first 2 columns already with the dates, and there is this third column which says JobKeeper Start Fortnight, and we've got fortnight 1, fortnight 2, fortnight 3. So if you're starting the JobKeeper scheme in fortnight 1, you'll need to notify the employee that you started in fortnight 1 using that special code. If you don't start until fortnight 3, then when you make that payment in fortnight 3, you will need to let them know, oh, we're starting in fortnight 3. Now at this point, Chris, people are probably saying, oh, but why would people start in fortnight 3? Surely everyone's going to start in fortnight 1. And that may not be the case, because not all employees are necessarily entitled to the JobKeeper payment straight away. And there are 2 big groups of people that may not be entitled to it right now. First one is people who are currently on workers' compensation. You don't get workers' compensation payments from the insurer, and also JobKeeper payments. So if you've got someone who is on workers' compensation for the first 1, 2, 3, 4, 5 fortnights, they aren't in the JobKeeper scheme yet. They are still on workers' compensation. The other group of people are people who are on government paid parental leave. Much like workers' comp, you get one or the other. So if you're getting your government paid parental leave, you continue to get that. And when it stops, that's when you move over into the JobKeeper scheme. And the interesting thing about the JobKeeper scheme is people who are on forms of unpaid leave are also entitled to the JobKeeper scheme. So once again, this is another little group of people who are winners. They might be, for the first 6 fortnights of this scheme, getting government paid parental leave, and then ordinarily they would have dropped down to 0 income because they would be on unpaid parental leave. Under the JobKeeper scheme, as soon as their government paid parental leave ends, they can then start getting the $1,500 JobKeeper. So under those circumstances, they may not opt into the scheme until fortnight 5 or 6. So you wouldn't start notifying the ATO that they're in the scheme until fortnight 5 or 6. And when they start, you would say, all right, this person is starting in fortnight 6, and that then sends a trigger to the ATO that they start getting that money at that point.
Jason, there might be another instance where you'd use a later fortnight start, and that would be when the employer, maybe in March, didn't fulfill the turnover deduction, but later in the JobKeeper period, actually hits that number, and so that they opt into the scheme a little bit later.
Absolutely, yes, yep. And so, yes, it would kick off when they opt into the scheme. So if they opt into the scheme in fortnight 6, that's when they make their first payment. Then they would say, right, we've opted in from week 6. The ATO would know to start reimbursing the employer from fortnight 6 onwards. Good point, Chris. All right. So much like the top-up code, there are very specific rules for setting up your JobKeeper fortnight start date. So once again, we use the other allowance code, and the description is JobKeeper-start-FN and then the number, and it's represented by a little XX here. It must be in caps, it must have the dashes, it must look exactly like that. And of course, once again, going back to the table to work out what the number is, we've got the date ranges for the fortnights, and we get the appropriate one. Is it fortnight 1, is it fortnight 2, whatever it may be. Now, here's the interesting thing. We're using an allowance code. And whenever we use an allowance code, there's usually a dollar figure that goes with it. You're getting a car allowance, and that car allowance is worth, $100 this week, for example. For this particular allowance code, what the ATO would like you to do is they'd like you to send through using the other allowance code, JobKeeper Start, and the number of the fortnight, but they would ideally like that code to come through with a dollar value of 0. Now, the way most payroll systems would work, if you don't pay somebody an allowance, they're not going to put that on the pay slip, and it certainly won't flow through into single touch payroll data, because if I've not used that allowance code, there is nothing I need to report on a pay slip or send through to the ATO. So it might require you to do a little hack, and what the ATO have said is, although we'd prefer that allowance to come through at a value of 0, you might need to put 1 cent beside that code so that it actually has a value and gets included on your STP file. So you might need to do a little hack.
Jason, that's not a hack. That's generosity.
Yeah, yes. It's an extra 1 cent for everyone. But the good news is you only have to do it once. So it's only on the fortnight that you start, they would get an extra cent. Now, once again, talk to your payroll software provider. And this is why the ATO started talking to them just before the Easter long weekend on the Thursday night. Some payroll software providers I've spoken to have said already, look, we're going to set up this JobKeeper Start fortnight code for our employees, and we're going to make it so that it'll go through with the dollar figure so that you don't have to put the cent through. If you've got 20,000 employees and you've got to give them all 1 cent extra, that adds up pretty quickly. So, some payroll software, providers are looking at, changing their code very quickly over the next week or so that if you're using that code, it can go through with a $0 value. So a couple of important things to remember: you must use the exact fortnight. You must have the number of the fortnight. If this does not go through, the employee will not get their money. So the ATO are looking for this data to come through from Single Touch Payroll and say, oh, Chris is getting JobKeeper payment from fortnight 1. We know at the end of the month how much we need to reimburse the employer. So you absolutely need to have this in there for every employee in the fortnight that you start paying them the JobKeeper payment. It's not updated. So, it's not fortnight 1 in fortnight 1, and then you don't change it to 2 and to 3 and to 4 and to 5. There's no need to change it. It's reported once when they start, and then you can stop and move forward. Once again, talk to your payroll software provider about how you make this work for you.
Okay, Jace. For those who've been waiting for the legislation and waiting to find out more information, so they haven't been paying the JobKeeper yet, and they're going to start doing it now. So are they doing it in fortnight 2, or are they doing it in fortnight 1? How does that play out?
Yeah. Okay. So let's look at a little example around this, because you're exactly right, Chris. This is all new information. Nobody knew about this stuff, and we're already halfway through the month, and we're only just getting this information now. So there are special transition rules that apply only for the month of April. So as I said earlier in the presentation, you have now until the 30th of April to tidy everything up in your payroll, and send through all the correct data. And the ATO are not going to be super fast in the month of April, whether each fortnight was exactly $1,500 per fortnight. So for this very first month, we can tidy everything up by the 30th of April. So the only requirement is the ATO need your STP file with all the correct information by the 30th of April, and they're not going to worry about what happened on a fortnight by fortnight basis. But moving forward, so once we get into May, it'll absolutely have to be done correctly at the time each particular fortnight. So let's look at an example about how we catch up and how we fix everything now. So we've got an employee who's paid fortnightly. Their first fortnightly pay date was the 2nd of April, and they got $1,000. Their second fortnight pay date was the 16th of April, and they got another $1,000. Now that you've been on this webinar and you've decided, right, we are going to opt into the JobKeeper scheme, as an employer, anytime after the 20th of April, you'll need to then go into the ATO website and fill out the official enrolment forms. And then, as I say, you've got until the end of the month, you've got until the 30th of April to tidy everything up. So this particular employer is going to get in a day early, and on the 29th of April is going to tidy everything up to make sure that the employee essentially got the equivalent of $1,500 per fortnight. So they're going to need to run an off-cycle payroll. So the first thing they'll do is they'll say, right, the JobKeeper start date for this employee was fortnight 1. So when the ATO see that, they'll say, right, this person was in the JobKeeper scheme for the whole month of April. They started in the very first fortnight. I will reimburse the employer the appropriate $3,000. The other thing they have to do in this particular scenario is make sure that the employee got $3,000 in the first month. So they got $1,000 the first fortnight, $1,000 the next fortnight. We haven't met our minimum obligation, so we'd need to do a JobKeeper top-up of another $1,000 to make sure that they're at the $3,000. So now, for the very first time, on the 4th of May, the ATO will reach out to everybody in the scheme who registered back on the 20th of April and say, right, we've got all your STP data. I can see that you have paid all these employees at least $3,000. You'll do a quick confirmation, and then the ATO will forward the money through. So a chance to catch up in April, but if you haven't caught up in April, there's not a chance to do it in May. You must have everything locked in by the 30th of April.
Okay. You mentioned earlier that there's opportunities for people to start on something other than fortnight 1. Can we look at how that works and why?
Yep, absolutely. So here's an example. This isn't an official ATO example. This is one that I've come up to explain this concept. So similar to the first example, the first fortnight was the 2nd of April. That was the payday. And this particular employee was on workers' compensation for that entire fortnight. They weren't at work and they were getting money from the insurer. So they were not eligible for JobKeeper at all in fortnight 1. In fortnight 2, where the pay date is the 16th of April, at some point during fortnight 2, the employee returned to work. So they had a few days off on workers' compensation, but then for most of the month, they were back at work. So now that they are back at work, they are eligible for the JobKeeper scheme. So they did a couple of days on workers' compensation. So for the first few days of the fortnight, they were still on workers' compensation, and we got money from the insurer to the value of $70. Then they did some work that might have been their normal full duties. They could have been on light duties, and we actually paid them for the time they worked, and we gave them $600 for time worked. So far in this particular fortnight, they've received $670, but because they're working and they're not on workers' comp anymore, they are eligible for JobKeeper. And I've said it a million times already in this webinar, you must make sure your employees get $1,500 each and every fortnight, because that's what the ATO give us. They'll only give you $1,500. It's not less, it's not more, it's $1,500 for everyone. So for this particular pay period, you would need to do a top up. They've already been paid $670. You would need to do a top up of $830, sending it through as the JobKeeper top up using the STP code. And we can now see, the ATO will now see that this person has been working. They've received $1,500. And you'll be entitled to, they'll give you the reimbursement. But because they are starting in the second fortnight, they weren't eligible in the first fortnight. When they have now opted into the scheme, we would say the JobKeeper start fortnight is fortnight 2, and we put that through as either the $0 or the 1 cent, so that it goes through to the ATO, and they would know when they do this reconciliation for the month of April, this person only started in fortnight 2. I'm not going to give the employer $1,500. I'm not going to give them $3,000. I'm only going to give them $1,500 because they weren't in the scheme in the first fortnight.
Okay, I think I've grasped the $1,500 bit, Jace. That's good. So we've got 2 new codes that we've talked about so far. So we've got JobKeeper top up, and we've got JobKeeper start. I'm guessing there's another one.
There is another one, the JobKeeper end fortnight. Now, and hopefully we won't need to use this code very much. Once somebody is in the scheme, as long as they go through to the scheme right through to the end, which ends on the 27th of September, there is no need to send through an end code. The scheme will just end when it ends on the 27th of September. The only time you would need to use the JobKeeper end fortnight code is if an employee has to exit the scheme early. Why would they do this? Maybe they have been at work, but they injured themselves and they go off on workers' compensation. And so just as they weren't allowed workers' compensation before, so for the first 6 fortnights they were at work, in the 7th fortnight, unfortunately, they had to go off on workers' compensation. We would need to say that, sorry, this person has now stopped getting JobKeeper, and the ATO no longer needs to reimburse us. Or alternatively, the employee may resign and say, I found a job somewhere else. You might need to tell the ATO that they've stopped. Or, there's a change in their citizenship or their visa expires, whatever it may be. You might need to notify the ATO that we've stopped making payment using the JobKeeper end fortnight. But it's only if you need to stop early. If you're not stopping early, just let it run through. There'll be no need to ever use the JobKeeper end fortnight. But much like the others, it goes in the other allowance area, and the code is JobKeeper-finish-FN with the fortnight in which it finished.
Okay, two things, just so, and when we use that, we might have to pay them another cent.
Maybe, yes.
The other question, so we've got start, we've got finish. Is it possible to have another start for the same employee?
Oh, do you want to give me an example?
Well, I guess workers' comp is one of the examples we've given before, that you might have somebody who in the first week of the scheme, they were fully off on workers' comp, then they come back on light duties. They might get a couple of fortnights of JobKeeper then, but they get they go off again, so they're fully off on workers' comp again. So presumably at that point we have to go finish, but then they get better again and they come back to work. So can we have a start, finish, start?
All right. I think first of all, I think I need a new moderator. I don't like these hard questions, Chris. Let's think about this logically. In terms of the way the legislation is written, yes, that would absolutely be an acceptable, format. You could opt in late, be in for a few fortnights, then have to opt out because the person then goes on workers' comp, and then opt back in. So in theory, yes, it can be done. Now, has the ATO considered this particular scenario? I suspect not. When I was on my call with the ATO last night, we threw a couple of questions their way, and a few of them said, oh, okay, we haven't actually thought of that particular scenario. Let's figure out how this works. So the ATO have been very clear that this is new legislation. They're building a scheme from scratch. building a scheme like this would normally take months and months and months. They've had to do this in a few weeks. So scenarios will pop up that they're not comfortable with. So if you were to get into that situation, it'd probably be worth talking to the ATO and saying, can I stop and start, multiple times. They're still writing the technology all around this, so that we're ready by the 4th of May. I can't answer with any confidence about whether the system will be able to handle something like this. Certainly under the law, it can be done. It might require some manual intervention. So the process of doing what you're suggesting, Chris, might be a little different. But I think we all need to be aware of that, there are not answers to every single question right now. And that's certainly one of them that probably hasn't even been considered.
Okay, Joe, so another issue that we talked a little bit about at the last webinar, but we've got more information on now, is the idea of notifying or nomination of employees. What have we got?
Yeah, so one of the key requirements of the JobKeeper scheme, Chris, is that you can only receive JobKeeper payments from one employer at a time. So if you have two employers, sorry, go again, Chris. Don't stop, Damon. Just go. Sorry, Chris. It takes me a little while to warm up.
Yeah, I'll wait for take 4. So, Jace, another issue that we talked a little bit about at the last webinar, but I understand we've got a bit more clarity around now, is the idea of notifying or nomination of employees. How does that work?
Yeah, good question, Chris. So we know one of the main requirements of this legislation is that an employee can only get JobKeeper payments from one employer at a time. And we know that the employer must notify employees that they're going to start receiving the JobKeeper. And the plan was originally that would give the employee the opportunity to go back to their employer and say, oh, look, no, actually I'm receiving it from somewhere else. And initially we thought that was going to be a rather informal process. But on Tuesday night, the ATO released this new form, which we're looking at here. And this is a compulsory form. So you as an employer must send this to all of your employees and say, right, we are intending to participate in the JobKeeper scheme and make the JobKeeper payments for you. Once the employee receives that form, they then need to fill it in and return it to you and basically agree and confirm that you are the only employer that is making JobKeeper payments for them. So this is a brand new requirement. And I suppose if we think about what we need to do now, we've only got till the end of April to get this all figured out, and they're making it very, very clear that this form needs to be issued to employees, straight away, ideally before we start making payments, and we absolutely need it back from employees by the end of April. If we don't have it back by the end of April, then in theory, they are not allowed to be receiving the JobKeeper payments. In terms of this form, we send it out. We don't have to send a copy to the ATO. We merely keep a copy on our records in case the ATO ever wants to come back and take a look at it.
Okay, two questions around that, Jace. You've said they have to get the form back, and if they don't get the form back, then they can't get JobKeeper. If they bring it back late, can they just opt in late?
Yes, so I suppose that might be another example where we now opt in fortnight 3, for example, because we didn't get the form back in time. So in terms of filling out this form, it's the same rules for everything else. We've got until the 30th of April to tidy everything up. And it's interesting, we spoke back at that very first webinar that, if you are going to opt in early, there's a little bit of a leap of faith. And it turns out here's another one of these little leap of faith moments. You may have already been paying JobKeeper to somebody for the last couple of weeks. Now there's the requirement to get this form. If they refuse to send it back or forget to send it back, unfortunately, we might be in an overpayment situation.
Yeah. Okay. The other question I have around this form, Jason, is obviously the employee is, I guess, accepting the nomination and agreeing to be part of the scheme, and they may have their own reasons for opting out of the scheme. But could an employer, choose not to nominate individuals or a group of people?
Yeah, it's a good question. We come across this one yesterday, didn't we, Chris? And I might
We
share
did.
the story because it was quite funny. We had one employer ring up and say, we would like to offer the JobKeeper payment scheme to all our employees except one. And this person's a real troublemaker. They've been claiming unpaid sick leave for the last several months. We think the whole thing's a rort. They're just very difficult. We don't want to do JobKeeper, for them. It turns out, we did a little bit of research on it yesterday. If you are in the JobKeeper scheme, you unfortunately need to offer it to absolutely everybody. So in this particular case, the employee who's been off on sick leave and has not been receiving any money for quite some time will now suddenly get this $1,500. So it's one in, all in terms of employees.
Good to know. So I think we've covered the scope, Jace. How do we bring it all together?
Yeah, so let's wrap it up and summarize really what we need to be thinking of. And I've put a step-by-step process together, although the order is a little bit questionable because some people are already in, and there are multiple things happening at once. So although I'm going to do it in a set format, you may do it in a slightly different order. So the first one is check your availability. Do you meet the requirements? So do you as a business meet the appropriate requirements to have the appropriate downturn in business? And then it's also on you to double check and be 100% sure that you're including the right employees. And we spoke about this in great detail at the last webinar. They had to be employed as of the 1st of March. There was a whole lot of conditions in terms of casuals and having more than 12 months worth of service. And that is on you as a business to figure out whether you as a business are eligible in the scheme and who your eligible employees are. And obviously, certainly we know as part of that, if you do think that you are eligible, you need to register your interest with the ATO. And the ATO have already received 826,000 expressions of interest from 826,000 unique ABN numbers. So there's a lot of interest in there. But if you want more information about that, check the ATO and the Treasury website because they have lots and lots of helpful information. And if you're a TAPS member, we've been sending you the links to all the updated fact sheets. So make sure you read them, and as a business, sit down and just double check that you are entitled to enter into the scheme.
Yeah, one of the issues, Jason, we talked about at the last webinar that we didn't have clarity on, although we agreed it's probably more of a matter for the CFO, but the issue of our companies grouped. So if you as an individual ABN are under the $1 billion threshold, but you're part of a larger group that their turnover is greater than 1 billion, how is your business treated? And we've had that clarified, that the $1 billion threshold is based on the group. So if you're part of a group and it's over $1 billion, then each separate entity, so each separate ABN within that group would have to fulfill the 50% reduction in turnover within their business to be eligible. So that's a bit of information we didn't know before.
And so based on that logic, if your turnover was less than $1 billion and you're currently paying a number of ABNs that are all related, let's say we're paying 5 different ABNs, 3 of the ABNs are doing very well financially, but 2 of them have fallen below the 30% threshold, you could apply for JobKeeper just for those 2 ABNs. Yeah, good. Interesting. Good. So the next step is notify employees, and we just learned about that new form, the JobKeeper Employee Nomination Notice. So start sending that out straight away. We have until the end of April to get those forms back. So get on that straight away, only 2 weeks to go with that. The third step is actually register and enter the scheme. And we know that at the moment, that's not going to be available until the 20th of April. So we've still got lots we can do leading up to that, start setting up all our codes and sending out the forms and checking our availability so that by the time the formal enrollment process begins on the 20th of April, you'll be ready to go. On my ATO call last night, we got an interesting question. So they said, right, so when we do officially go in and enroll, will the ATO send us back some sort of a letter saying yes, you are confirmed, you have met all the criteria. And the answer appears to be a big no. And if you think about the way our tax system works, when we do our own personal tax return, we fill out all the information, we send it off to the ATO, and they just believe what we say. They give us either a refund or we get sent a bill for the extra money. They just believe that information, and they believe it until something comes to light that indicates that maybe that information was wrong, or maybe they do some random audits and check. But our system has always been based on a self-assessment system. So a lot of people are saying, I'm not doing anything until I do my enrollment and the ATO confirms that I'm definitely in the scheme. And that's not how it's going to work. You will be making a declaration, you'll be providing your bank details, you'll be providing information about how much your business has seen in terms of a downturn. There'll also be a question about how many employees you're likely to be opting into the scheme in the first 2 fortnights. They are just collecting that information just for their information. You will be making a legal declaration. They are assuming that is true. There will be no double checks at that point to say, oh yes, we can see all you provide all the information. You are absolutely correct in all your information. They are just assuming what you're providing is correct. So going back to step 1, the emphasis is really on you to make sure you meet all the eligibility requirements. When you actually enroll, the ATO are not going to be double checking at that point. They'll just be assuming what you're saying is true and correct. Make sense?
It does indeed.
Moving on to our next slide. Step 4, pay employees. So just a reminder, pay employees at least $1,500 per fortnight, and most importantly, record the data in your payroll using the new STP codes. So the JobKeeper start fortnight, the JobKeeper top up, the JobKeeper finish fortnight, if that is appropriate. And I can't stress enough, if you get those codes wrong and if they're not 100% perfect, particularly the JobKeeper start code, you're not going to get paid. Step 5, once we're up and running, we will need to do a monthly declaration. The first monthly declaration will occur on the 4th of May. So we have to get all our STP data in by the 30th of April. That gives the ATO a couple of days to crunch the numbers and get it all in a format. The way it'll work is because they have all the STP data and because they have that JobKeeper start fortnight, they will know how many fortnights you've already been in. They will know which employees you are paying, and they will pre-populate a list. So you will log into a special ATO portal using your MyGov ID and they will have pre-populated all your employees, and they say, right, based on STP data, these are the employees we believe you have been paying, and they have all received $1,500 per fortnight. Sign this declaration to confirm that this is true and correct, and that will then trigger your payment. As you do that monthly declaration, you'll also have to provide some other information such as your current and projected turnover, but we won't know exactly what that declaration looks like really until the 4th of May, but you will need to go through and do that declaration every month. So the process will be pay people for the month, do the monthly declaration, and that will then trigger your reimbursement. Now, there might be a small amount of people on the call today who are not in the STP world yet. The ATO are building a different system for people who are not in STP, but for people who are in STP, STP is the way the ATO would prefer you to go. So if you're not in STP, you'll need to talk directly to the ATO about how your process is different. We don't know how that works as yet, but I suspect most of the TAPS members on the line are in the STP world. And the final step, Chris, is reimbursement. As long as you've done your declaration and all your STP codes are correct, that's all the information the ATO will need to know to figure out how much to reimburse you, and then you'll get your money very quickly or shortly after you make that monthly declaration. So that's how the process works, but certainly a lot of work for us all to do between now and the 30th of April.
Indeed. Now, we know the legislation surrounding JobKeeper was obviously about these payments, but there are also some changes to Fair Work that were included in the legislation. What were they?
Yeah, so we hinted at this in the last webinar. So if you're opting into the JobKeeper scheme, there are now special Fair Work changes that apply for people in the scheme. And probably best to explain it with an example. So in the last webinar, we talked about a personal trainer who works at a gym. That gym had to close down because of the quarantining rules and social distancing. So that personal trainer had to be stood down, and was stood down with no pay. Now we have the JobKeeper scheme. He'll be getting $1,500 a fortnight, assuming his employer, chooses to enter the scheme. And we spoke about then, although he can't work as a personal trainer, he's now getting $1,500 worth of money from the government. We are paying him $1,500. If our business is set up in such a way, we could get $1,500 worth of productivity. We could, pay him his hourly rate and say, right, based on the $1,500 we're giving you, we want you to do so many hours worth of work. Now, he can't do his normal personal training, but, maybe he could come up with new eating plans and new workout plans and come up with a marketing strategy to go around that. So for your employees who are stood down, there's certainly an opportunity for you to be able to say to them, look, we're now paying you $1,500 a fortnight. We want you to do $1,500 worth of work, and you are able to consult and negotiate with your employees around that. The other part of the legislation that has changed allows you to say, for example, you might have your employees, they might all be working, but as we continue out through the next 6 months, work may become less and less and less. There is a greater opportunity for you to sit down and talk to your employees and say, look, we can't continue paying you your normal full-time rate. We're unfortunately going to need to drop you down just to the $1,500, and the process in terms of negotiating that will be, much, much easier. So we're seeing considerable changes to the Fair Work Act. We know we're seeing 99 modern awards changed last week as well, with pandemic leave and, the ability to send employees off on half pay in terms of taking annual leave. So there are lots of changes all being bundled, together. But certainly these Fair Work changes, I just wanted to mention them and make you aware of them. They're probably not a strict payroll function. They're probably more HR, but they all merge together.
Yes, and I think one of the interesting things, Jason, and we've had a number of questions through Helpline on this, it's important that consultation happen, because the questions we're getting a bit of is, well, what if the employee would rather do nothing for their $1,500 and come back and do some work? And so they, I guess the question is being asked, can we, force them to come back? And I think it falls into that idea of still being a reasonable direction, and there being a consultative process.
Yeah, that's right. Certainly as part of this legislation, there is rules which says the employee can't unreasonably refuse a request. It's in difficult times where it's an extraordinary time. This is totally unprecedented. So, they're making the rules far, far more flexible for the next 6 months during this difficult time. But in the real world, you might say to somebody, right, we stood you down a few weeks ago. We're now going to put you into the JobKeeper scheme, and we want you to do some work. And they might say, look, I found part-time work somewhere else. So I'm not available Monday, Tuesday, and Wednesday. So this is where the consultation and the negotiations, will need to come in. If they have some time on Thursday and Friday, you as an employer might have to bend a little as well, and say, well, we want you to work every Monday and Tuesday. The employer might say, well, sorry, I've got another job, but I can work Thursday and Friday. So this is where the consultation is. Both parties need to be a little bit reasonable. But the good news is, the employee can't just say, no, tough luck, I'm not doing any work, give me the money. There is the scope for you to, get them to do some work, which is the best thing for the economy, and it's best thing for our businesses. So, during this quiet time, having employees doing some work, whether it helps us now or gets us ready for when we, go back to normal, the good news is you can get some productivity out of your employees based on these Fair Work changes.
Sounds good, Jason. Is that it? Are there any more changes?
That's it for now, but who knows? We've done 3 of these webinars now. Who knows whether next week we need to do another one, Chris?
Well, what I do know, Jason, is that TAPS has been keeping payroll people informed for the last 30 years. And if there's changes that we need to inform people about, that's what we'll do.
I agree. So, Chris, thank you very much for your time today. Thank you to everybody who's listening at home or listening on YouTube. We look forward to seeing you in person again really, really soon. But for now, take care, stay safe, and wash your hands, everybody. Oh, and stay at home. Stop going outside.
Thank you.
Bye-bye, everybody.